Hello, hi guys. This is Balakrishna from Lecturepedia.in. How are you? Hope you people are doing well. Even I am fantastic. Now, in the today's class, we will be discussing MTP Series 1 for CA Final Audit, which is relevant for November 2023 examinations. Okay, I'll be trying to discuss this MTP in as much as a little time as possible so that you can quickly cover entire MTP. First of all, starting with MCQs. First MCQ. Mr. R, friend of Mr. P, a chartered accountant in practice, invited Mr. P to set up a network firm along with two more friends. All of four auditors agreed to the same and decided to start a network firm by the name Messrs. RP and Co. The name, it should not be and Co. Okay, the name that they have chosen is wrong. However, one of the auditors suggested that they cannot use the term and Co and it needs to be changed, because since it is a network firm, you cannot use and Co and associates. These type of terms you should not use. Then what you should use? You have to use and affiliates. Let us see. But Mr. R informed that there is no such regulation regarding the firm's name, which among the name shall be suitable to the newly started network firm in accordance with the provisions of Chartered Accountants Act and regulations. Okay, which name can be chosen from the following option? R and P, it cannot be chosen because, sorry, RP and Co, it cannot be chosen because it is ending with and Co. RP and associates, even it cannot be chosen. RP and networks, no. RP and affiliates, yes. For a network firm, the name should end with and affiliates. Next, so option D would be the correct answer. Second MCQ. During the conduct of audit, it was found that management has intentionally made material misstatements in several items. Okay, several items of the financial statements to deceive the users of the financial statements, to reduce the pressures of meeting market expectations and to increase the reputation of the company. What would be the implications on the auditor's report if no adjustments are made to the financial statements regarding the misstatements made by the management? Okay, management has made various misstatements in the financial statements, and they are material as well, and they are pervasive. Okay, because they are saying several items have been impacted. Several items means it is pervasive, and it is uh, deceiving the users of the financial statements. These misstatements, they are deceiving, so they are also material, and auditor is having evidence that this fraud or this misstatement has been done by the management, so evidence also there. So in this situation, auditor will give adverse opinion, right? Let us see which option would be correct. The auditor would issue qualified opinion. No, this is not correct. The auditor would issue adverse audit opinion. Okay, stating that except for these matters, financial statements are fairly presented. No. Okay, whenever you are giving adverse opinion, you cannot use this terminology. This terminology you will use when you are giving qualified opinion. So option B also not correct. Let's see option C. The auditor would issue adverse audit opinion stating that financial statements do not give a true and fair view. The auditor should also include basis of for adverse opinion paragraph below the opinion paragraph. Yes, option C will be correct. He will give adverse opinion stating that the financial statements are not showing a true and fair view. Next, I guess in the answers for the second MCQ, ICAI has given answer as option B, but in my opinion, option B is wrong. Okay, option C will be correct. Third MCQ, because obviously whenever you are giving adverse opinion, the terminology except for these matters, you will not use the terminology. The audit team has obtained the following results from the trade receivables circularization. Circularization means trade receivable confirmation. Another term used for confirmation is trade receivable circularization of NEMI for the year ended 31st March 2023. Okay, based on trade receivable confirmation following is a situation. These are the customer names AM, AN, AO, AP, AR, and these are their balances as per books of accounts. Okay, as per sales ledger, these are balances as per the confirmation that has been received, and these are the comments. Let us see. Now AM co balance in ledger is 2 lakh 25, confirmation is 2 lakh 25. Okay, no issue with this. AN balance as per ledger 3 lakh 50, balance as per confirmation 2 lakh 75. That means here, as per the confirmation that is received, the amount of balance is less when compared to the balance that is present in the books of accounts. Here what they are saying, invoice raised on 29th March 2023 might be the, you know, Name Limited, they might have raised invoice for this difference amount on 29th March, and it has not been or might not have been reflected in the confirmation that is given by the customer. That might have happened, because of that this difference might have been present. Let us see. AO Co. Balance as per sales ledger is 6 lakh 20,000, whereas balance as per confirmation is 4 lakh 80,000 also. Here also again there is confirmation, the amount is less. What they are saying, payment made on 30 March 2023. Okay, if the customer has made payment on 30 March 2023, that is before 31st March only, it should have properly reflected in the books of accounts. Okay, that is the sales ledger of the company, and the balance should match with balance confirmation. So apart from this, there is something, you know, misstatement or something wrong in this AO and company balance. Let us see. AP 5 lakh 35, 5 lakh 35. A balance of 45,000 is currently being disputed by AP Co. Okay, but the confirmation it is matching. AR Co 1 lakh 78,000, and you have not received any reply with respect to balance confirmation. Now what they are asking, which of the following statements in relation to the results of trade receivable circularization is true? Let us see, read one by one each option. No further audit procedure need to be carried out in relation to the outstanding balance with AM AP. AM AP. Since their balances are matching, okay, the balance confirmation and the sales ledger balance is matching, will you leave it as it is, or will you carry other audit procedures also? Okay, it depends. Based on your judgment, if you feel that still additional audit procedures has to be carried out, you will also carry out additional audit procedures. You will not just leave, or you will just not keep them aside by just thinking that okay, the sales ledger balance and balance confirmation is matching, so this amount is correct only. You will not straight away come to this conclusion. So this option it is not correct. Even though both the balances are matching, you will perform other audit procedures also based on the situation or scenario. The difference in relation to AN Co represents timing difference and should be agreed to a pre-year end invoice. See, AN Co. Here, what we have discussed, the same thing we have discussed now. The difference in relation to AN Co represents timing difference. Okay, they have raised invoice on 29th March. Since they have raised invoice on 29th March, it is reflecting in the books of accounts of the company, but it might not have reached the AN Co. So their balance confirmation is not uh, reflecting that invoice amount. This might be the reason. So what you need to check here, you should check whether that invoice amount that has been raised on 29th March is matching with the difference. What is the difference here? 3 lakh 50, 2 lakh 75, 75,000 is the difference. Whether this invoice is for 75,000. If this invoice is for 75,000, okay, it is due to the timing difference. So option B looks good. Option B is correct answer. Let's see option C what it says. The difference in relation to AOCO represents a timing difference and should be agreed to pre-year end bank statements. No, the difference in AO and Co is not with respect to timing difference, with respect to payment, because if you have paid the amount, okay, if the debtor has paid the amount, it should have been reflected in the bank statement, and it should have been, you know, adjusted in the ledger, the balance ledger, it should have been adjusted. You cannot consider this as a timing difference. There is something wrong in a balance of AO. So option C, it is not correct. Due to non-reply, the balance with ARCO cannot be verified and different customer balance, no. Okay, if you have not received reply from ARCO, you will further perform audit procedures with respect to why reply has not been received, whether that debtor is actually existing or not. All this you will check. You'll just not, you'll not just leave it aside and you will go for other, other debtor. You will not do like that. You will further perform audit procedures. So option B is the correct option. Next, the management of Prabhu Limited has developed a strong internal control in its accounting system in such a way that the work of one person is reviewed by another. Since no individual employee is allowed to handle a task alone from beginning to the end, the chances of early detection of frauds and errors are high. CA Viharsh has been appointed as auditor of the company for current financial year 22-23. Before starting the audit, she wants to evaluate the internal control system of Prabhu Limited to facilitate the accumulation of the information necessary for proper review and evaluation of internal control. CA Viraj decided to use internal control questionnaire to know and assume the system and evaluate the same. Okay, he is trying to use internal control questionnaire to understand internal control system. Which of the following questions need not to be framed under internal control questionnaire relating to purchases? Okay, with respect to verification of internal controls in the area of purchases, which of the following questions need not be asked in the internal control questionnaire? Let us see. Are authorized signatories for purchases limited to elected officials? Yes, this question, it should be included in the internal control questionnaire with respect to purchases. Are payments approved only on original invoices? Yes, even this question should also be asked. This question should also be reviewed with respect to purchases. Does authorized officials thoroughly review the documents before signing the checks? Yes, even this one you need to review. Or monthly bank reconciliations implemented for each and every bank account of the company? See, this is no way related to purchases. Yes, this question you can ask in internal control questionnaire with respect to normal other internal controls, but with respect to internal control questionnaire specifically related to purchases, you need not ask this, point D. So option D will be the correct answer. Next, fifth question. 50-50 test determination is popularly used in NBFCs. So option C, 50-50 test, 50% of the total assets of NBFC should be financial assets, and 50% of the revenue should be in the form of income from those financial assets. That 50-50 test will use in NBFC. Next, you have been given an assignment of audit of IT department of a PSU. A checklist was handed over to you which contained many questions. Okay, they have given you a checklist and this checklist is containing various questions. You need to verify whether all these present or not. So here what you are doing, you are taking a benchmark or you are taking a checklist and you are comparing whether the system is as per the checklist or not. That means you are verifying whether system is complying with the checklist. So this will become a compliance audit. So he is asking the type of audit being conducted is likely to be a compliance audit. Where is the option? Option C, compliance audit. Next, Suvrat and Co. Chartered Accountants, mainly into statutory audit and tax audit, is now exploring the areas of due diligence and investigation assignments. During the course of due diligence, an article assistance inquiries to the principal whether it is required to verify letter of comfort given by target company to a bank. You are required to guide the article assistant regarding whether the letter of comfort given by the banks by the target company needs to be reviewed as part of financial due diligence. Choose the correct reasoning from the below. Yes, you should verify letter of comfort. Okay, letter of comfort is a document that is issued by parent company to the bank on behalf of subsidiary company. Okay, if let's say subsidiary company wanted to raise a loan from a bank, now for this loan the parent company, it will give letter of comfort to the bank stating that this company, it is in a comfortable position Okay, its financial position is good, you can give loan to this company. Okay, this letter of comfort is similar to that of a guarantee but not a guarantee. Okay, guarantee, it will be having a legal obligation on the parent company or any company. If it gives a guarantee, he is having a legal obligation to discharge that guarantee if that party fails to pay the amount. But in case of letter of comfort, such legal obligation is not there, but a moral obligation exists. So since this, in case of letter of comfort, it is a liability, hidden liability, you need to verify this letter of comforts also in the due diligence process. Let us see. Yes, the objective of due diligence exercise will be to look specifically for hidden liabilities or overvalued assets, and since letter of comfort given to banks is a hidden liability, it should be reviewed. Yes, option A, it looks good. Let us also read other options. Yes, letter of comfort given to bank is a guarantee. No, letter of comfort is never a guarantee. No, see, they are saying no. First, the answer itself is wrong. So option C also not correct. Here also they are saying no. So option A, it is correct answer. You need to verify letter of comforts also in case of due diligence. Next, MCQ 8. Mr. Ishwar was appointed as statutory auditor of Chennai-based listed company New Limited for the financial year 22-23. Mr. Ishwar had signed limited review reports for each quarter till the quarter ended 31st December 2023. That means 3 quarters limited review reports have been signed. Owing to his personal commitment and increased workload, tendered his resignation to New Limited on 30th January 2023 and asked the company to appoint another auditor to issue an audit report for remaining quarter and financial year 22-23 as a whole. But the management of the company did not accept the same. Is the management of New Limited right in asking Mr. Ishwar to issue audit report for the last quarter and the financial year 2023 as a whole, despite his resignation? What could be the reason for the same? The answer is yes. What the management is asking for is correct. Since he has given limited review report for the first 3 quarters, it becomes obligation on the resigning auditor to give the limited review report of the fourth quarter also, as well as audit report for the entire financial year. So here what the management asking is correct. So the answer, it should start with yes. First option says no. So option A is not correct. Yes, if the auditor resigns within 45 days from the end of the quarter, he is obligated to issue or no. This is this is also correct, but for the situation that we are having, this is not correct. Option C, no. This is also not correct. Option D, yes. Mr. Ishwar is responsible to issue audit report for the last quarter as well as the financial year 2023. Since he was the one who had issued the same for the first 3 quarters, he is also obligated to issue audit report for the financial year as a whole if he resigns. Yes, option D is correct. Okay, option B would have been correct if the auditor has resigned after completing 45 days of the first quarter or second quarter. Okay, if he has resigned by issuing audit report of first quarter or second quarter, then option B would be correct. But here in this situation, he has resigned after giving after giving that quality review report, not quality review report, limited review report of the third quarter. Option D is correct. Okay, next, MCQ 9. CA Dayalu was statutory auditor of Safety Limited. It was an insurance company having fire and marine insurance products. In case of a marine insurance, it had a risk nearly 100 to 120 crore, and in case of fire insurance, 70% of its fire insurance premium was received from Star Hotels. Safety Limited has a policy that in case of a marine insurance, it will not hold risk of more than 50 crore. Hence, Safety Limited signed a contract for 5 years with Help Limited, which was involved in the business of reinsurance, to cede risk above 50 crore for 40% on a proportional basis. If the risk exceeds 50 crores, it will be transferred to the Help Limited. In case of marine insurance, what is the type of treaty that Safety Limited has signed with the Help Limited for reinsuring the marine insurance? Yes, it is surplus proportional treaty reinsurance. Okay, if at all it is exceeding 50 crores, that risk, it will be transferred to the Help Limited for a proportional amount of premium. So this becomes a surplus proportional treaty reinsurance. Okay, it is not a quota share. In quota, in each and every insurance contract that the company enters, certain quota of risk will be transferred to the reinsurance company. Okay, so option B is not correct. Facultative, it is not correct. Non-proportional, it is not correct. Option A, surplus proportional retentions is correct option. Next, Speak Limited is showing a commission expense of 2 crores during the month of October 2023. The auditor has made an effort to understand the business process that makes up this financial statement line item as to how it is initiated, recorded, approved, posted, and reported. Okay, they are verifying a process of commission. Okay, with respect to how this commission transaction is initiated, recorded, processed, and posted. During this exercise, he finds that there is a difference of 1,50,000 in the commission recorded as per the Sanchar software and commission as reflected in SAP accounts. What kind of risk assessment carried out by the auditor in the given case? He has carried out evaluation of risk and controls at process level. Okay, option A is the correct answer. By that, individual MCQs gets completed. Next, moving to integrated case scenario. Basically, in this integrated case scenario, they have given 5 points. Point A, point B, point C, point D, and point E. On each of these 5 points, they have asked 5 MCQs, and all these 5 they are with respect to reporting in Caro. Okay, now let us read each of these 5 points and then we will solve the MCQ. First, point number A. The management has provided the following details of dues that have not been deposited on 31st March 2023 on account of disputes. Now, the management they have not deposited the following statutory dues because of disputes. What are they? Income tax, EPF, municipal corporation, that is property tax. Okay, these 4 have not been deposited due to dispute. Basically, you will report them in clause 7, right? Let us see what is the question that they are asking. MCQ 11. Select the correct statement relating to reporting of statutory dues which have not been deposited on account of deposits under clause 3(7)(b) of CORO 2020. Basically, here of these 4, which has to be reported in clause 7. Basically, all these 4 you need to report in clause 7. You might get a doubt whether property tax is also a statutory due or not. The answer is yes. Even property tax, it is also a statutory due. If it is disputed, you need to report in clause 7 subclause B. Let us see the options. First option, it says only matters relating to income tax pending before CIT appeals and PF contribution matter pending before honorable court need to be reported. No, even property tax should also be reported. So option A is wrong. Only income tax matter, no, wrong. All 4 matters for which information has been provided in fact pattern has to be reported. Yes, option C would be correct. Next, we'll read scenario B. The following information is available from the financial statement record of the company. What is that information? Property, plant and equipment is 3,500 as on 31st March 2023, and as on 31st March 2022 it is 4,000. Right of use assets, it is 750, 700. Intangible assets 42, 40. Okay, value stated above or gross block. Okay. Now, right of use assets, ROU assets, consists of leases where the company has obtained the right of use asset under the lease agreement in accordance with Ind AS 16. Okay, these are the details with respect to property, plant and equipment, including intangible assets as well as right of use assets. Basically, you will report them in clause 3, right? Fixed assets, property, plant and equipment. Let us see what they are asking. 12th MCQ. Identify the correct statement relating to reporting duties of auditor under clause 3 of CORO 2020 with regard to first option. What they are saying, it is duty of auditor to report whether company is maintaining proper records showing full particulars including quantitative details and situation of property, plant, equipment. Similarly, There is a duty to report on whether the company is maintaining proper records showing full particulars of intangible assets. Okay, till here it is correct. However, this duty does not extend to reporting and maintenance of records of right of use assets. No, this point is not correct. Or management duty is also to uh, properly maintain the records related to right of use assets also. So option A is not correct. Next, option B. It is the duty of auditor to report whether a company is maintaining proper records showing full particulars including quantity, details and situation of property, plant and equipment. This duty also applies in reporting to maintenance of records of right of use assets and intangible assets. Yes, correct. Okay, this duty extends to right of use assets and intangible assets also. Let's see what further they are saying. Further, auditor has to report whether property, plant and equipment have been physically verified by management at reasonable intervals. This duty to report on physical verification by management also extends to right of use assets. Yes, option B is correct. Okay, here under clause 3 you need to report about all those three: property, plant and equipment, intangible assets and right of use assets also. Okay, that was 12th MCQ. Moving to scenario number C. Meadow Chemicals Limited produces goods for which the central government has specified maintenance of cost records. Clause 6. Besides, the cost audit has also been mandated under Section 148, Subsection 2 of Companies Act. The cost auditor has already examined cost records and issued a cost audit report. Okay, now with respect to this, what question they are asking? Question number 13. As regards cost records is concerned, which of the following statement is correct regarding reporting under clause 6 of CORO? Let us see. The auditor is required to report whether prescribed cost accounts and cost records have been so made and maintained. Yes, the auditor is having responsibility to report whether proper cost accounts and cost records have been made and maintained. Option A will be correct. Let us also read other options. The auditor is not required to report on maintenance of cost accounts and cost records since cost auditor has already issued audit report. No, this is not correct. The auditor is required to examine the cost audit report as well as take into account any qualifications therein, report them under clause 6 of CARO. No, this is not the duty of the auditor. However, his duty to report on maintenance of cost accounts and cost records does not exist anymore. No, even option C is not correct. Okay, the auditor's duty is to report whether proper cost accounts and cost records have been maintained. The auditor has duty to report on cost accounts only. The clause does not require auditor to comment on maintenance of cost records. No, okay, you need to comment on maintenance of cost records also. So option A would be correct. I guess in 12th MCQ I have told you the clause number as 3. Okay, it is clause 1. My mistake. Okay, by mistake I have told it as clause 3. Okay, clause 1 deals with property, plant and equipment, right? Yes. So for MCQ 13, option A will be correct answer. Next scenario. During the course of audit, CA Paras has found that physical verification of inventories of the company has been conducted during the year by management. The following is a summary of inventory as per physical verification conducted by management vis-a-vis its books of accounts at the year end. Okay, the physical verification of inventory, clause 2. Now, what they are saying, as per physical verification, as per books of accounts. Let us see the values. Okay, raw material as per physical verification it is 1000, but as per books of accounts it is 1020. As per and the work in progress it is 200, here it is 220. Finished goods, here it is 2000, here it is 2290. Okay, there are variations, there are discrepancies. Stores and spares it is 150, here it is 120. In total, here it is 3350, but here it is 3650. Okay, with respect to this, what they are asking. And here you need to remember that if there is a discrepancy of 10% or more, then you need to report, and this 10% or more you need to calculate each class wise. Okay, each class of inventory you need to check the discrepancy, not in total. This point you need to remember. Okay, it is 10% and it is class of inventory, and this 10% you need to calculate on adjusted inventory value. Okay, at the correct, okay, adjusted means after excluding shortages and excess inventories. After adding excess inventories and excluding shortage inventories, the adjusted value of inventory, okay, on that you need to calculate 10%. And if it is, if the discrepancy between books of accounts and physical inventory is 10% or more, then you need to report the same in clause 2. Let us see first of all what is the question that they are asking. Considering the values of inventories arrived upon physical verification conducted by management vis-a-vis values reflected in books of accounts, select the correct option. For instance, in case study to be reported by auditor on inventories under clause 2 of Coro 2020. Let us see. First option, what they are saying: differences in all cases of on all classes of inventories, raw material, work in progress, finished goods, and stores and spares should be reported irrespective of materiality, and the auditor should also comment on whether they have been properly dealt with in books of accounts. Now you should first of all calculate whether the difference is 10% or more. Only then you need to report them. You should not blindly report if there is a difference. Now if you see here, for raw material, if you calculate 10%, let's say here the adjusted value is this, as per physical verification is there na, let's say that is the adjusted value only. So on 1000, if you calculate 10%, it will be 100. Okay, if the difference is 100 or more, then you need to report. But here the difference is only 20, so you need not report the discrepancy in raw material. Work in progress, 200 into 10%, it is 20, and discrepancy is 20. You need to report work in progress. Finished goods, 2000, 2290, here it becomes 200, 10% means, but the difference is 290. Even this you need to report. Stores, it is 15. Okay, 15, 150 into 10% is, it is 15, but the difference it is 30. So this one also you need to report. So all these work in progress, finished goods, stores and spares, you need to report. Raw material discrepancy you need not report. But the first option says all has to be report. Okay, all has to be reported: raw material, work in progress, finished goods, stores. So option A is wrong. Option B, there is no instance to be reported in the given case, since the difference between total value of inventory, see, you should not consider that 10% on total value, you should calculate class wise. So option B is also wrong. Option C, to report differences in the value of work in progress, finished goods and stores and spares, since, okay, yes, this would be correct. Work in progress, finished goods and stores differences has to be reported. Let us see what is the reason that they are giving. Since the difference in each class of inventory is 10% or more, on which you have calculated this 10% based on value after adjustments. Okay, you should apply this 10% on the inventory value after adjustments. That means after considering excess and shortage of inventory, okay, on the correct figure you need to calculate 10%. So the auditor should also comment on whether they have been properly dealt with in the books of accounts. Okay, see, in the question I have calculated the 10%. Now I have just assumed that the book value itself is the correct value just for the purpose of calculation purpose. Okay, if you want, you can also assume, where did it go? Okay, if you want, you can also assume these values as the correct values and calculate. But in the MCQ, you need to choose the correct wording. Okay, if you see option D, it would be same as option C, but they says this 10% is based on value as per books of accounts. No, okay, you should not calculate this 10% either on value of books of accounts or value as per physical inventory. You have to calculate this 10% on the value of inventory that has been arrived after making adjustments. Okay, it might be either book value or it might be either physical inventory value. Okay, you need to take the value of inventory that has been arrived after making the adjustments. Adjustments means shortages and excess. Okay, so option C will be correct. Hope you understood this. Next, final scenario. During the course of audit, he is informed by management that two supervisory employees have been dismissed from the service due to fraud of 25 lakh committed by them during the year 22-23. The amount has also been subsequently recovered from them during the year itself. Now, fraud you will report in clause 11. Let us see. Should the fraud described in para I in case of be reported by the auditor? What the first option says, there is no duty to report fraud since the amount involved is less than 1 crore. No. Okay, in case of reporting of fraud as per caro, you need not consider amount involved. Okay, so option A is not correct. Whatever the amount, irrespective of amount, you need to report it. It is a fraud on company and the auditor should report the nature of fraud, the amount involved. The duty to report the fraud under this clause is irrespective of amount involved. So option B, it can be correct. Let us also read other options. The requirement to report the fraud does not apply in the current situation since the fraud was not discovered by the auditor. No, even this option C is not correct. The requirement to report the fraud does not apply in the current situation since the amount has been fully recovered. No, what if amount has been recovered? Okay, fraud has taken place, you need to report it. Option B is correct option. Next, integrated case scenario number 2. Here also similar to integrated case scenario 1, you will be given 5 scenarios. Okay, scenario 1, scenario 2, 3, 4, 5, and based on each scenario an MCQ will be asked. And this case scenario, it is from audit of banks. Okay, let us see. While reviewing the advances of the branch, she means the auditor, came across the following particulars of two cash credit accounts. What are those two cash credit accounts? KTFab, PM Decor. Okay, these two cash credit account customers. Sanction limit is 10-15 and the value of primary security is 20-25. Value of collateral is 15-12. Net worth of borrower is 5-7.5. Net worth of guarantors is 3-5. Okay. And further information with respect to KTFab. Okay, with respect to KTFab, what is the information that they are giving? As on 31st December 2022, drawing power is 9, but outstanding balance is 9.61. Okay, so the outstanding balance is exceeding the drawing power. Again, on 31st March 2023 also, again outstanding balance is exceeding drawing power. February 2023, again it is also exceeding. 2023, okay, as on 31st March 2023 also, outstanding balance, it is exceeding the drawing power. See, the outstanding balance in the account has remained more than 9.5 crore beginning from 31st December 2022 till 31st March 2023 on all days. Basically, for cash credit account, in order to treat it as NPA, if it remains out of order for a period of 90 days, then you will treat it as NPA, right? Now, out of order means the amount of outstanding balance, if it is exceeding the drawing power, then you will consider that particular account as out of order. Now, in this situation, KTFab should be treated as NPA. Next, PM Decor. What is the situation of PM Decor? Drawing power is 12, outstanding balance is 12.5. It is exceeding. Okay, on 31st January 2023, drawing power is 12.5, but it is the outstanding balance is 12.25 only. So it is within the limit of drawing power. Again, 12.4, 12.5 within the limit. 12.5, 12.5. Okay, not crossing the drawing power. So here PM decor you need not classify it as NPA. It is not NPA. Now let us see what is the question that they are asking. Keeping in view information stated in respect of two borrower accounts at para 1 of case scenario, which of the following statement is correct? They are asking you to find the correct statement. The classification made by branch is not proper. Both the accounts should be classified as NPA. No, both accounts need not be classified as NPA. The classification made by branch is not proper. Borrower account KT Fab should be classified as a standard asset. However, borrower account of PM Decor should be classified as non-performing asset. No, okay. KT Fab should be NPA. PM Decor should be standard, right? Just a second. Yeah, KT Fab NPA, PM Decor standard. So option B also not correct. Option C. The classification made by branch is not proper. Borrower account KTFAB should be classified as non-performing asset. However, borrower of PM Decor should be classified as standard asset. So option C will be correct option. Next, scenario number 2. On reviewing statement of accounts classified as NPA, as on 31st March 2023, she finds that education loan was granted to son of Mr. X, a customer of bank, for pursuing short duration technical high studies abroad for 50 lakh. Some time back, repayable in 5 years. The loan was granted against security of residential house of Mr. X valuing 60 lakh. Okay, loan amount is 50 lakh. The value of security is 60 lakh. Okay, that is fine. And this value is assessed by bank's empaneled valuer. However, the name of the bank's empaneled valuer has now been removed due to certain irregularities. Later, value of residential house got reassessed from another valuer and he gave a report reflecting realizable value of residential house as 20 lakhs. Okay, the value of security has fallen drastically. If the value of security has fallen drastically means you should classify that particular loan as a doubtful asset, because the value of security has drastically fallen and the borrower he has not refilled the security, so you need to classify it directly as doubtful irrespective of whether he is serving the loan amount or not. Meanwhile, the installments in education loan account are overdue for 110 days. Okay, now the overdue of installments are also started as on 31st March 2023. The account was classified as standard till 31st till the last year, that is 31st March 2022. Now let us see what is the question that they are asking. Question number 17. Considering issue relating to education loan described in para 1 of case scenario, how should it be classified in the books of branch? It should be classified as a doubtful because the value of the security has a drastically fallen, right? Next. While verifying deposits of a branch, she noticed that inoperative accounts for less than 10 years or to the tune of 5 crore reflected in the balance sheet of the branch. She plans to focus her audit procedures on this segment too. One of her team members suggested the following audit procedures. Okay, audit procedures with respect to inoperative accounts. What are the audit procedures? Verifying whether there exists a system of informing customers on accounts turning inoperative. Okay, this procedure you need to perform. Identification of cases where there is a significant reduction in balance as compared to the last year. Yes, this one you need to do. Testing debits in inoperative accounts. Yes. Verifying auto activation of inoperative accounts. No, there will be no such concept of auto activation of inoperative accounts. Okay, inoperative accounts, they will be activated only on submitting proper KYC documents by the customer. So there will be no such concept of auto activation. So this need not be included in your audit procedure. Okay, the first three procedures you can perform with respect to inoperative bank accounts. Let us see the question that they are asking. MCQ 18. As discussed in para 3 of case scenario, one of the team members has suggested certain audit procedures described in the case scenario for verification of inoperative accounts. Which of the audit procedure combination of procedures are relevant in such a situation? Okay, which procedures you can follow? The first three procedures you can follow. Okay, wherever in the option, wherever you find the first three procedures, that you can select. See, identification of cases where there is a significant reduction in balance as compared to last year. Okay, testing debits in inoperative accounts and verifying this option, it need not be there because you will not verify auto activation. Next, verifying whether there is this a system of informing customers on account turning inoperative, identification of cases where there is significant reduction in balance as compared to the last year, and verifying again auto activation, no. Here also auto activation, no. Verifying whether there exists a system of informing customers on account turning inoperative, identification of cases where there is a significant reduction in balance compared to the last year, and testing debits in inoperative accounts. Option D will be correct answer. Next. Case scenario 4. While gathering information to be included in LFIR, she comes across some cases of advance accounts which became non-performing within relative short span of time. The details of a few such identified accounts are as under. Okay, basically this question, it is based on quick mortality accounts. Quick mortality accounts are those accounts which have turned into NPA within their first year of sanction. Okay, if within their first year of sanction they turns NPA, that type of accounts they will be known as quick mortality accounts. Now ABC Industries, they have been sanctioned on 15th May 2022. That is, we are checking this as on 31st March 2023. So within 1 year only it has turned into NPA. Basically, all these accounts they have turned into NPA. ABC Industries sanctioned on 15th May 2022, and since it turned NPA within 1 year of its sanction, it is a quick mortality account. XY Private Limited sanctioned 1st July 2022. Even this also turned NPA within 1 year, so it becomes quick mortality account. SK Sons, it has been sanctioned in 2021, okay, and it has been renewed in 4th April 2022. Now in the second year it has turned NPA, so it is not a quick mortality account. DK Creations, on 1st October 2022 it has been granted and turned into NPA. Since within 1 year it has turned into NPA, that becomes a quick mortality account. So except SK and Sons, remaining all are quick mortality accounts. Let us see what is the question that they are asking. Okay. Nineteenth MCQ. Quick, quick mortality cases are required to be stated in LFIR by statutory branch auditor with reference to the particulars in para 4 above. Which of the following statement is correct? All the 4 cases reflected in table in para 4 are quick mortality. No. Okay, that third one is not a quick mortality account. What is the name of the third customer? I forgot. Let me check. Yeah, SK Sons. Except SK Sons, remaining are quick mortality. Only the case of DK Creations is in the nature of mortality. No. Option B not correct. Option A not correct. Cases of ABC, XY, DK Creations are in nature of quick mortality. Yes. Option C will be correct. And quick mortality cases are indicative of shortcomings in credit appraisal. Okay, while granting the loan itself, if you have not performed proper credit appraisal, then the chance of that particular account turning into NPA is high. So quick mortality is associated with proper credit appraisal. So option C will be correct. Let us also see option D. Cases of XY Private Limited, DK Creations are in nature of quick mortality. No. Okay. XY, DK and ABC. All these 3 are quick mortality accounts. 19th question, option C is correct. Next. Moving to next scenario. The branch also sends a substantial number of inland outward bills for collection. The bank has a system under which the account of a customer on whose behalf a bill has been sent for collection is credited only after the bill has been actually collected from the drawee, either by the bank itself or through its agents. Okay, this is with respect to outward bills sent for collection. Now, one of her team members has jotted the following audit procedure for inland outward bills sent for collection. Okay, with respect to outward bills for collection, what audit procedure you will perform? following: verification of outward bills for collection as on closing date. Yes, this one you can perform. Verification of accrual of commission income in respect of bills outstanding on closing date. Even this you can perform. Verification of accrual of charges in account of customers on whose behalf bill was sent for recovery where bill has not been returned unpaid. Even this procedure you can perform. Let us see what is the question that they're asking. Okay, basically all these three procedures you can perform with respect to outward bills sent for collection. Let's see the question. Yeah. One of her team members has a planned certain audit procedures described in the case scenario at paragraph 5 for verification of inland outward bills for collection. Which of the following audit procedures or combination of procedures are likely to be relevant in such situation? See, okay, which of the combination of those audit procedures will give more result? Okay, that they are asking. If you see option A, to verify bills for collection on closing date. Okay, if you only perform this audit procedure, it is okay. But along with it, if you also perform other audit procedures, it will give even more results. So only performing option A is not good. So this is not correct answer. To verify bills for collection on closing date and verification of accrual of commission in respect of bills outstanding as on closing date. Yes, this one also you can perform. But apart from these two, if you also perform third procedure also, it will be even more good. So let us search if there is a option which is saying three procedures, then we will select that option. Okay, if there is no option saying three procedures, then option B holds good. Let's see other options. To verify accrual of charges in account of customers on whose behalf bill was sent for recovery where bill has been returned unpaid. Okay, if you only this perform this single procedure, it is too narrow. Okay, here you are checking only with respect to unpaid bills whether the charges have been properly charged or not. Okay, only one aspect you are checking in this procedure. Okay, what about all other aspects regarding charging the commission, regarding accrual of the commission, okay, regarding proper crediting of the customer account, all these should be checked now. So only option C, if you perform, it is not good. So option C also wrong answer. But if you see in the answers, ICA has given option C as correct, but in my opinion option C, it should not be correct because it is too narrow. If you only perform only that single procedure, okay, it will not give you the expected results. I'm not saying that you should not perform that procedure. You can perform that procedure, but along with it, you should also perform other procedures also. Okay. Apart from option C, there are other options which are even more better. Let's see. Option D. To verify accrual of commission in respect of bills outstanding on closing date and verification of accrual of charges in account of customers on whose behalf bill was sent for recovery where bill has been returned unpaid. Okay. If you see in all these four options, option B is more relevant because in option B, apart from verifying the commission aspect, you are also verifying the bills for collection as on closing date. So option B, it is more relevant in my view. But as per ICAI, they have given option C as correct. Okay, but option C, it is not correct in my opinion. Okay. So by that we have completed integrated case scenarios. And the theory questions, there are no new questions in this paper. Mostly they are repeated questions only. Okay, you can just go through those theory questions. Okay, I'm not discussing those theory questions here in this video. Okay, I'll be winding up this class as of now. Take care, bye bye, see you.